I'll now look at the chat quickly and see if we have any questions further. Please feel free to send your questions through Mike's way or mine. I'll now open everything. I'll open to the questions. Mike, anything that you'd like to highlight?
You've been busy. Well done. Those are some beauties. We had a question just to get an idea how much would be able to claim for a house built in 1995 and fully renovated. If we look at, say, the construction costs of a property in 1995, the construction cost was obviously less than it is today. So you can actually look at building price indices and get an idea of what the index difference would be. So you probably find it's around about 60% of the cost to build a house today. So a house, I mean, it definitely depends on the area. The construction costs are different in Sydney and Brisbane and Melbourne and regional areas, but you could comfortably assume that we're probably looking around about the sort of 150 to 200,000 in construction. So if we're looking at that figure, we'd probably be sort of somewhere around the 3,000 or 4,000 at a minimum each year on the original building structure. And then with the renovation, it comes down to how much the spend is. So if it's had a kitchen, bathroom, you know, painting, tiling, that sort of thing, it could be somewhere between $50,000 to $100,000. And if we're just looking at extracting the plant and equipment items, because unless it's brand new when you install it for the tenant, you won't be able to claim it. About 80% would be structural components. So in that instance, we're probably looking somewhere between $40,000 to $80,000 worth of Division 43 or structural improvements. So $80,000 is $2,000 a year. So you add that to the original, you might be getting, let's say, $5,000 to $6,000 as a rough guide, assuming that it's somewhere close to a capital city. But what we do for free is, if this is a property that you own, Vinay, you can send that through to us. I'll ping my website down in a second, and we do free estimates for them based on looking at the property and the photos and those sorts of things.
That's amazing, Mike. The next question is, how about tax deduction for granny house?
Yeah, absolutely. I mean, as long as it's an income producing property, it's exactly the same. So let's say you have a granny flat at your principal place of residence, you rent it out, then we just look at the granny flat itself. If you have an investment property and then you put a granny flat on the back, then we're looking at the original investment property and the granny flat. So it's exactly the same. Granny flats tend to be a lesser construction cost than a house because they're smaller and a little bit more mobile. But typically brand new granny flats, we sort of see $6,000 to $8,000 worth of deductions in the first full year. So definitely you can claim deductions on granny flats.
Awesome. The next one, I've got an anonymous attendee question. How is Frankston as an investment? I'd say Frankston actually is a target of a lot of homeowners that I'm aware of. It's you can start with a few $100,000 to multi-million dollars worth of properties. I love Frankston just because of its vicinity to water, and the demographic is amazing. I definitely think longer term, you can't go wrong if you're buying near to the water. I'll move on to the next one. Are Olympics already factored into the prices now? Okay. What are your thoughts on this, Mike? Olympics and Queensland, that's been a hype.
Yeah.
I do think it's a hype though, but yeah, well, what are your thoughts there?
Yeah, I think, I mean, the Queensland market is booming regardless of the Olympics. The price differential between the other capital cities, the fact that they've handled the pandemic well, it doesn't take you long being locked down in Melbourne to dream of sunnier pastures. So I don't think they necessarily have been in there, but see, the reason why the prices would grow is because you're going to have a huge construction expenditure with all of the bits and bobs that you need to have a games, right? I couldn't tell you what the accommodation capacity of Brisbane is, but I assume it needs to be expanded and they're going to need new facilities and that sort of thing. So that that creates jobs. People need to perhaps move there to look after the project. So I think it will have a positive effect. I don't know that it's necessarily priced in, but I don't know if it's necessarily a bigger investment than current things like the airport expansion and the Queen's Wharf redevelopment and a lot of things that are already going on. That's about where I'm at, but it's certainly not my exact area of expertise.
I somewhat concur with that. I think the spread is such that it's so the Olympics. Usually, I've read on Matusik again and a couple of other websites. Whenever Olympics happen in any area, it actually leaves that state with a deficit. So afterwards, I'm not sure what are the advantages. The prior, I'm definitely it would create wherever the infrastructure spending is happening, there would be a bit of job creation there. And the other thing is it's a hype saying we are spending 10-12 billion dollars, but they're spread over starting now and reaching up till that 2032 sort of mark. So it's a spread on nearly next 10 years at least. And then the other thing is it's spread across Queensland. I don't see how it would benefit a single area, but Queensland's its run is due since 2011. I do think it's gonna have a fair bit of run, maybe next 1 or 2 years. Awesome. Go to the next one. There's another extension to this question: investing in properties versus investing in REITs. I'm not sure really about REITs. I know I love property investing, and I think I'll stick to it for now. So I'll go to the next one. Yes, I'm happy to share the copy of presentation, Gaurav. I'll do that in an email, and if fine, I'll share Mike's presentation as well, if fine by Mike.
For sure, yeah, absolutely.
Awesome. The next one by Dilip: after we retire and we sell all the properties, having the exit plan, do we have to pay all the depreciation schedule to ATO? I believe this was covered, isn't it, Mike?
Yeah, so we talked about the capital gains tax implication. So you obviously got your 60%, your 50% if you're owning the property for a year or more, and then it's just at your marginal rate of tax. And then of course you would want to get accountants' advice because there's differences between the structure and if you're in pension mode and those sorts of things. But yeah, we sort of covered that a little bit before.
Awesome, thank you, Mike. There's one by Vineet: if I buy a home to move in and then after 9 months we rent it out, is it beneficial when selling after 5 years? Will the CGT be lesser as I stayed there initially for 9 months? It's out of my jurisdiction.
I think maybe I'll have a go at that. When you're sort of purchasing a property, you've obviously got the principal place of residence exemption for capital gains tax. So in this particular scenario, you're living in it, and then you're electing to not use your exemption. So from 9 months on to the end is when you would track the growth in the property. So you would want to get a valuer to provide you with a market valuation as at the time it becomes an investment property. And ideally, all the capital growth happened in that first 9 months, and then nothing happened for 5 years, because then, you know, there's no CGT to really pay on it. But avoiding tax is not necessarily a great strategy. I mean, even me as a tax depreciation person, I wouldn't recommend purchasing properties because they've got better deductions. That doesn't necessarily make them great investments. But in that situation, you need a valuer and you need an accountant, and you probably need a strategy rather than necessarily trying to game the tax system.
Awesome. Thank you, Mike. Dilip says, this is after we retire. Okay, so it says after we retire and we sell all the properties, having the exit plan, do we have to pay back all the depreciation schedule to ATO?
Yeah, we're just talking about the Division 43, so the structure, and then of course you've got the 50% exemption, and then it's at your marginal rate.
Okay, I'll cover your question, Sandeep, since Mike's there. Mike, there's another one for you regarding granny on principal place of residence. if we claim depreciation on granny and selling house in future, how capital gains would work?
Yeah, this is I'm not
Yeah,
qualified accountant, so you need an accountant to work that out exactly. But it would be really pro-rated on it, because only part of it was an investment, an income producing asset. So you would need to sort of calculate what the increase in value of that granny flat was over that time. So that's where a valuer and an accountant would be able to work that out and apportion it for you.
Good. I'll come to Sandeep's question. What is your long-term outlook for Rockingham in Perth? Look, Perth overall, I think the outlook's definitely good. Anything around the coast and within the 10-15 commute, 10-15 k's commute to city, I feel Perth will do well, just because it has gone down, rather not just stagnant, it has gone down by 35% approximately since 2014. The rents were down by nearly 25%. You've seen the growth, how Perth has been growing now. Last 2 years, it has given a consistent growth. And I do believe the rents are catching up as well. So I think Perth will do pretty well next few years at least. There's another point that I liked was in the median, if you see the slide, back in 2010, Perth's median was better than Adelaide and Brisbane. So I'm not saying it will still be better. I'm just saying there's a lot of catching up that needs to be done here. I have another question. So Ashish, what's your opinion of having apartment townhouse in Hope Island in Queensland under SMSF? Dilip, I haven't analyzed Hope Island or any island investment for that matter. The one that I've sold now is around Bellarine Peninsula in Victoria, which is, but I just sold because I thought it's good to consolidate. So islands, I'd say wherever you're buying, just the underlying principle, please keep consistent supply, demand, affordability. That's it. Awesome. Any further questions, guys? Just feel free, don't feel shy. There's no right or wrong. There's no big or small question. Please keep sharing. I'm waiting.
Nandini's got one about building a granny flat on the principal place of residence and having to pay capital gains. So you would have your principal place of residence exemption, but you've also got, pardon me, an income producing asset there. If it's a granny flat that you actually put your granny in and you don't charge rent, then I wouldn't imagine that you would need to do that. But my understanding was that there would be a capital gain if that's an investment property. But as I say, I'm not an accountant. You would need to just get some accounting advice on that.
That's spot on. There's another one by Dilip. Is it worthwhile having property in SMSF because interest rates are high? Good question. I have just done 2 purchases in last week for SMSF purchases. I think it's very worthy to get that advice from a qualified ASIC licensed advisor. I do feel SMSF has its benefits, especially please have a look at my last webinar where we were joined by Shiv, who said, if your balance is 200,000 or more, the fee that you pay, from his analysis and standpoint, the fee that you pay to your super funds actually level out, and then anything more than that, any further than that, you actually get benefited by having SMSF. Also, SMSF buying property definitely has its advantages, less taxes to pay, and I don't recall. I think again Shiv can highlight better, but he's not here. So I believe up till 2.3 million each partner, there is a CGT free amount as well, again subject to be validated by an advisor there. Next one's, which state of Australia will get more future employment infrastructure than Metropolis in NSW? Tricky question, Gaurav. I think the different infrastructure projects that I target, I think inland rail is the most important one at this moment. Now, future employment infrastructure, I'm not sure. Again, I noted some worthy projects that are considered. I am tracking few business cases as well, where I feel those suburbs, certain suburbs will get benefit. This is in Queensland and Adelaide. So again, infrastructure is not important. I think what happens after that is more important, or what happens during that infrastructure is being built is more important. Question from Ankur: how work from home CBD's decline is impacting spread of property growth? Good one, Mike. I would like to hear your thoughts as well on there. How do you think working from home and decline of people going to CBDs is impacting the spread of property growth?
Yeah, it's a really interesting forced experiment, isn't it? I think that some people are overestimating it and some people are underestimating it. What a ridiculously fence-sitting thing to say that is. I don't think that we're necessarily going to see dead CBDs, but the demand is going to be less. People that have been under lockdown and maybe have been in fear of their families and those sorts of things have had a bit of time to reconsider what's really important, and we've looked at sort of space, and I think people value a bit of fresh air, some wide open spaces. I don't think the demand for inner city living is necessarily going to be quite as strong. You're still going to have, the big four banks and accountants wanting those CBD presences. I think that'll be a thing that slowly disappears over maybe decades, but I don't see the same amount of demand for the city as pre-pandemic.
I think I conquer those thoughts because people have realized the importance of having those spaces. Also, because I've seen a lot of buyers jumping into the market for upsizing as well, just so they need that extra room now to I don't know, make it a study or an office space. And that's why even in places like Adelaide and even regional Queensland, we are looking at people who just want to move outskirts. So I pretty much conquer your thoughts there. The next one, your opinion to buy an apartment in inner city, as the inner city market has been hit badly of pandemic. So I think Mike did cover that. I don't think it's a wise option unless really you're taking that risk of vacancy rates, and I haven't seen any growth, honestly, in the apartments unless you're doing some sort of innovative thing. Investing in bigger lands in regional areas when your borrowing capacity is almost maxed out. I don't know. I think I'm a big believer of having something from your investments. Having lands, I don't know how you're looking for returns and how long you'd be holding. Holding costs are equally important. Opportunity costs are equally important. So that would be my answer to those. It just depends on a personal circumstances and personal choice. Awesome. Now, all right. So, yeah. So, Mike, this I'll post it to general audience. So this one is.
I just sent something to you.
Oh, okay.
Sorry.
Awesome.
No, actually, I meant that for everybody. But yeah, obviously, I don't know how to drive this thing.
Okay, I'll put it for everyone. Don't worry. So this is from Mike, guys. It's just to tracking apartment vacancies. I think that's a good thing to track. There's a question by Dilip again. We have 2 minutes now, so I'll take that one. He said, okay, investing in ETF or other avenues. Look, I think that's, again, a personal choice. How financially you want to achieve your goals is purely an investor's call. I found property as a medium because I feel it suits my circumstances, but down the line, I would have to diversify as well. One asset class definitely is not a safer bet, but this is something that a financial planner should be able to highlight, or you would be better able to assess your personal circumstances. All right, so how much, Mike, are you doing for CGT? Sorry, I mean, okay, depreciation schedule for a property, any special deal tonight for webinar? Yes, Dilip, Mike did cover. Mike, you want to cover it?
Pardon me, I muted myself.
Yeah, so it says the deal for depreciation schedules
Deal.
for the webinar participants.
Yeah, so our standard fee for residential property is $650 plus GST. So we look after Ashish and Oswald Buyers Agency for $600 plus GST. So you get a $50 discount there. You can go to our website, you can email me direct, whatever, happy to help you out. The most important thing first is we assess that there's value in the schedule, because we don't want to charge you for something that there's no benefit to you. So that's the first step. But if there's value in your property, we're happy to pass on that reduced fee.
Awesome. It's 7 spot on. Thank you so much, Mike, for your support today, for sharing the insights. Thank you, everyone. I do appreciate you spending time and joining over the webinar. I look forward to keep on seeing you guys. That's it. Thank you very much.
Thanks for having me, and thanks for all the questions.
Cheers. Thank you, Mike. Thanks, everyone.